brought to you by TrendyVest.com. On the surface, Thursday looked like just another split verdict day on Wall Street. The Dow hit a record, the Nasdaq slipped, a chip maker crushed earnings, tech got beaten up. Move along, nothing to see here. Except there is. Tonight, 5 stories hiding behind the headline numbers, and at least one of them should have every investor paying attention. Here's where things closed today. The Dow Jones, up 71 points, closing at 51,920. A new record intraday high, touching 52,655 during the session. The S&P 500 essentially flat, down just a fraction of a percent to 7,357. And the Nasdaq, the tech-heavy index, down nearly 0.5%, closing at 25,358. That's 4 straight days of losses. Its worst streak since February. So, a mixed bag. The old economy won today, tech lost, but the real story isn't in the scoreboard, it's in what drove it. Start with Micron Technology. The memory chip maker reported earnings last night that were, frankly, stunning. Revenue of $41.5 billion, nearly quadruple what it posted a year ago. Analysts had expected $35 billion. The stock surged 17%. But here's the twist. Micron's blowout wasn't just good news, it was a warning signal. Just before markets opened this morning, Apple announced sweeping price increases on its iPads and MacBooks. The reason? Soaring memory costs. Microsoft followed hours later, hiking prices on its Xbox and other consumer hardware. Its stock dropped more than 3%. Think about what just happened. The AI infrastructure boom is so intense, data centers are consuming so much memory that it's now squeezing the companies that make the products sitting on your desk. The AI revolution just got a little more expensive for the rest of us. This morning, the government released its personal consumption expenditures report, the Federal Reserve's preferred measure of inflation. The number came in at its highest level since April of 2023. Hours later, Chicago Fed President Austin Goolsbee told CNBC that core inflation is, and I'm quoting here, too high and trending the wrong way. Bank of America went even further. Their economists are now calling for 3 rate hikes, September, October, and December, which would push the policy rate back to 4.25% to 4.5%. Markets have not priced this in. If Bank of America is right, the second half of 2026 could look very different from the first. Late today, oil futures jumped 2%, pushing back above $70 a barrel. The reason? Reports that Iran's Revolutionary Guard attacked a Singaporean vessel in the Strait of Hormuz. Now here's why this matters beyond the obvious. Energy markets have been falling for weeks. Traders bet heavily on a lasting ceasefire. That means a lot of money is sitting on the wrong side of this trade right now. A sustained flare-up in the strait doesn't just push up gas prices, it pours fuel directly onto the inflation fire, and it hands the Fed another reason to act. This is the kind of story that starts as a footnote and ends up rewriting the entire narrative. Here's the number I want you to sit with. Goldman Sachs's risk appetite indicator, their proprietary measure of how confident or how exposed investors are, currently sits at the 99th percentile of all readings since 1991. Investors haven't been this all in since before most of Wall Street's current traders were out of college. Historically, readings this extreme have been followed by S&P 500 returns running below long-term averages over the next 12 months. But, and this is important, there's a silver lining. Beneath the mega cap drama, market breadth is actually improving. 58% of S&P 500 stocks are now trading above their 50-day moving averages. That's a sign the rally may be rotating. Moving away from 5 AI giants and spreading into the rest of the economy. The Dow's record today, led by Caterpillar, United Health, and industrial names, not a single tech stock points in that direction. Quick hits before we go. First, come Monday morning, the Dow Jones Industrial Average gets a makeover. Verizon is out. Alphabet, the parent of Google, is in. It's a symbolic moment. A 130-year-old index, formally retiring the telecom era and welcoming the AI era. And second, mark your calendar for July 4th. That's when a new federally backed investment account program begins accepting contributions on behalf of American children. Michael and Susan Dell alone have pledged $6.25 billion to fund accounts for 25 million children. So, where does that leave us? Thursday's session looked like a draw. The Dow won a few points, the Nasdaq lost a few more, but underneath the noise, inflation is re-accelerating. The Fed is leaning hawkish. A Middle East flashpoint just got hotter. Investor positioning is stretched to levels we haven't seen in a generation. The market isn't sounding alarm bells. Maybe it should be. I'm Nicholas for the Markets Desk. We'll see you tomorrow.